Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Small and mid-cap stocks. Are they the real road to riches? And if yes, then what should you be doing with SMID exposures, as it's called, small and mid-caps? That's how it's called. The acronym goes by the word SMID. Now, market experts say that small and mid-cap stocks in the current market environment are still expensive. So what should you be doing? This week, we do a deep dive into the world of small and mid-cap investing via mutual funds. What are the mistakes to avoid, and which are the funds that can potentially offer great wealth creation opportunities if you're in the market for the long haul? Joining me to discuss this and bring us lots of very interesting data points and analysis today is Alekh Yadav, Head of Investment Products at Sanctum Wealth. Alekh, really appreciate you joining us in the studios. Good to have you in, and I think this is your first Let's Talk Money.
That's right.
So welcome to the show.
Thank you so much. Thanks for having me.
So, this is something that we've been hearing, common narrative in the market right now is that large caps are safer, the market is correcting. So don't be overexposed to small and mid caps. The heydays after COVID are over. That's what the wise men are telling us. Why don't you give your take? How critical are small and mid cap stocks and funds in anyone's portfolio?
Sure. So mid and small cap stocks are, of course, important. What happens is that there are certain sectors which are not represented by large caps. And in certain cases, the market leader itself is a mid cap and a small cap. Like for example, auto ancillaries, there'll be some companies which will be making certain parts for an auto manufacturer, and they by themselves are mid and small cap. So if you want such kind of exposure, then you have to have allocation to mid and small cap. While I agree that that mid and small caps are expensive at this point of time, and hence you may have lesser allocation to them, but some allocation at any given point of time makes sense.
Okay, so let's look at some examples from history maybe, and we all know that history cannot be projected into the future. It's no guarantee for future returns. But historically, and I'm now talking about people who are planning long-term portfolios. You don't want to stress too much about 6 months ke liye ye mid-cap fund kharida, then you get out, then another one year you put your money in this small cap fund and then you get out. But for steady wealth creation, have SMIDs really delivered as a category?
Sure. So if you look at last 20 years data right now, as in April 2025, if you look at 20 years data back, if you go back and look at the past 20 years data, right now mid caps have outperformed large caps, and they have in fact outperformed small caps as well. Small caps have done better than large caps also. So that's how it's been. But what happens when you look at 20-year data is that point-to-point data is that there are certain periods that can impact the returns, significantly. In what is happening right now is that March 20 onwards, you've seen a big bull market for mid caps and small caps, and that's why the CAGR is also looking higher. But if you look at a long-term chart where if say you had money invested in May 2005 and you then expanded to right now, there are points of time where mid and small caps have underperformed large caps. For example, in the 2013 time period, large caps, are behind mid and small caps. If you invested money in May 2005 and you held it till August 2013, then you would have been better off in large caps. Similarly, in the COVID correction, you would have been better off during the COVID correction if you were in large caps, even if you had invested in May 2005. But right now, mid and small caps have outperformed.
So market cycles many a times influence which category of market capitalization of stocks will do better. And okay, we've got some data points now which are reflecting exactly that. So what we've done is we've taken this data and we're looking at three different buckets, three different market cycles. So if you go back in time, 2005 to 2009, there was a bull bear cycle there, then 16 to 20, and now. So why don't you kind of briefly explain this to us, Alekh?
So generally, mid and small caps are a little high beta. That means they tend to do better in bull markets. And as you can see here, during the 2005 to 2008, which was a big bull market for India and Asian markets generally, mid and small caps outperformed. Small caps did much better than large caps as well. But during the great correction, the GFC, which was the global financial correction, we saw that large caps fell lesser than mid and small caps. The same thing sort of got repeated in 2016 to 2020 as well. 2016 to 2018 was a very good time for mid and small cap. In fact, some of the mid-cap mutual funds and small-cap mutual funds delivered 100% type of returns. There again, large, mid and small caps outperform. But in the 2018 to March time, March 2020, which is the COVID time, they again underperform. This was a time when there was the SEBI recategorization and large cap funds were selling mid-cap stocks. And that was followed, of course, by the COVID correction. And then post-COVID, we have seen mid.
So broadly speaking, what you're saying and what past track record tells us that in bull market phases, typically small and mid caps do better.
Right.
When the market is under the weather, when there is a correction phase going on, then typically large caps outperform.
Exactly.
Let's also pull up a chart. I think, yeah, there we go. We've got that chart up, which talks about long-term performance. And here in this chart, I think it's pretty evident. Here, May 2005 till April 2025, this is a 20-year period. Here, mid-caps are showing the maximum outperformance.
Yeah.
So is it fair to say that if you're in a decent mid-cap fund for a long period of time, you will make money?
Yeah. So here again, if we see, if you see the blue line, which is the large cap line, till August, till 2013, which is during that time, we can see that the blue line is ahead of mid and small caps. It's actually doing better even in the COVID time. It is actually post-COVID where mid and small caps have done better. Having said that, this is just index data. And when we look at mutual fund data, we'll see that mid-cap mutual funds and small-cap mutual funds have actually done better than the index. So that adds a little bit of alpha.
Okay, so before we move on to figuring out what kind of funds will work well for us, this data also tells us that there are plenty of people who will try and time this.
Yeah.
When the market is bullish, let's buy a mid-cap fund. When the market's bearish, sell your mid-cap funds. Right now, we've been in a bit of a challenging phase since October. So isn't this a little counterintuitive?
Sure.
How should you, in terms of our behavior as investors, when it comes to timing our entry and exit in mid-cap funds, what should we do and not do?
Yeah, so I think the best is to start with the anchor. And the anchor here could be a benchmark. Like, for example, say the total market cap of India, about 75% is large cap, 20% is mid cap, and 5% is small cap. So that's your starting universe. Depending on your risk profile, if you're a young person, aggressive, have an aggressive portfolio, then in your case you could have like a higher amount of mid and small cap, say maybe 30 to 40% mid and small cap. If you're a conservative investor, on the other hand, you will be at a lower end, maybe 10 to 20% mid cap, small cap. Depending on your view on the market or what you're hearing on the market, you could use these ranges. So right now, you would be closer to 30% for the aggressive investor and maybe closer to 10% for the conservative investor. If it is a market which is a little more positive, then you could be towards the higher end. But using these guardrails and using a benchmark actually helps avoid taking too much of cash call. I'll just use one example here. So for example, in 2021, 2022 actually, mid and small caps corrected. They corrected about 15-20%. If seeing that correction, if somebody had got underweight, then from 2023 to 2024 onwards, like September 2024, when markets peak, you would have missed a 50-60% rally. So trying to time it too narrowly is a problem, and that's why you use guardrails and use ranges to sort of do allocations for mid and small caps.
So in today's environment, for a medium risk investor who's at least in the market for the next 5 years, what is the allocation you recommend?
Yeah, so as I said, 20% is mid cap, 5% is small cap for a general market cap. In this case, I think you should be closer to that range. Maybe 20% mid cap and 5% small cap is what you should have.
Okay. So that kind of puts to rest this whole issue of how much mid-cap exposure do I need? Now the next question, you have, I don't know, and you count this, I'm not sure how many funds, but there are hundreds of mid and small cap funds in the market. There are actively managed funds, there are passive funds which are simply tracking the index. Is there a huge variance in the performance?
Yeah, there is variance. While over a 10-year period, that variance may look small, but if you do an absolute number, then it comes down to a lot. For example, if you look at the last 10 years return, then the top quartile fund is delivered about 16.9%, while the bottom quartile, which is the last 25% of the funds, they've delivered about 14.6. So that's a difference about 2.3. But if you do it over a 10-year period, that's a 25% absolute return difference. So it's a difference between 1.1 crore versus 1.25 crores. That's a significant amount, And when you extrapolate it to 15 years, that 2% becomes 30%.
Yeah, I don't want my fund to be underperforming my friend's fund by 25%.
That's
Definitely
right.
not.
That's right.
And for small caps, what's the variance you said?
That's actually even more. So for small caps, in a 10-year time horizon, the difference between top quartile and the bottom quartile is almost 4%. So that if you do over a 10-year period, that's almost 50% difference.
50% difference?
Yes.
Over a 10-year period?
Over a 10-year period.
In a fund that Alekh might have and the one that I might have?
Yes.
Okay, we don't want to be in underperforming funds.
Yes.
So where do we start?
Yeah, so I think the starting point is similar to any other fund. You first look at who the fund manager is. The fund manager becomes even more relevant in a mid and small cap environment, because what happens is that the skill set that you require for a large cap investment is very different from small cap and mid cap investment. Also, there is little coverage in terms of information and data. So the fund manager should have the expertise to have done mid and small cap investing over a longer period of time. So that's, I think, the first starting point, fund manager having relevant experience and relevant mid and small cap experience. That's one. The other very relevant point right now is this fund size. And SEBI has also sort of come out with the whole liquidity framework for mid and small caps. So there, you don't want a very large fund when it comes to mid and small caps. What can happen there is that, for example, if it's a 20,000 crore fund and you want 1% allocation, 1% of that has to be allocated to a company, that comes to about 200 crores. And some of these small cap companies, maybe 3,000-4,000 crores in market cap. Free float would be lesser, so maybe 1,000 crores of free float. Out of that, if a fund is buying 200 crores worth of that company, that means 20% of the free float is with one manager. Now, if he needs to sell it, then that can become a challenge. So fund size is also quite relevant when it comes to large and mid, when it comes to mid and small cap. Then, of course, the other things like consistency of fund. You want a fund which is consistent over a period of time. You don't want somebody who's top and then falls down. That's anyway common with any typical fund that you will look at. And then, so these are, the few things that one would look at. Fund manager, fund size, and, consistency of past returns is what is relevant when it comes to mid and small cap.
All right. I think, very worthwhile points to keep in mind when you're deciding on which mid-cap fund and small-cap fund to pick. We will take a very quick break, but after the break, we get down to the specifics now in terms of some examples, some funds that you can work with, fund houses that have had a good track record when it comes to small and mid-cap investing. We'll discuss the details after this short break.
Let's talk money